Hi all, thanks for tuning in. In my previous videos, I shared my 2025 returns and best and worst stocks. It's now time to look forward to 2026. This weather advisories was announced 2 weeks ago by NEA, but I'm sure you'll agree with me that some days in the past week felt like we're back in summer. Just like weather forecast, predicting the market outlook is even more elusive. If that's the case, why am I predicting a market crash? I'm not saying it'll happen, but preparing for the worst keep me from getting carried away. My investment journey has shown a clear rhythm over the decades. There have been periods of strong gains, often followed by corrections or losses, and then subsequent recoveries. This cyclical nature is evident in both my previous and current portfolios. The question mark for 2026 is simply the next beat in this ongoing rhythm. My approach has always been a long-only portfolio. I don't engage in shorting or use complex options to hedge. This means I rise and fall with the market waves. Imagine my portfolio as a small boat in the open sea. As the captain, I can't control the weather, but I must ensure the boat doesn't break or capsize in the rougher sea. We're coming off 3 successive years of double-digit returns in my current portfolio. Historically, after such strong runs, the statistical likelihood of a down year increases. This isn't a prediction, but an observation of market cycles. It prompts me to consider what 2026 might hold, given this pattern. So, why the cautious sentiment? Several factors contribute to a cloudy outlook. Firstly, we avoided the hard landing many feared in 2025, with GDP growing at a healthy clip. However, part of that growth was fueled by a rush to beat new global trade tariffs, and that momentum might just fade in the coming months. Even if quality businesses manage to navigate these uncertainties and continue to perform well, their stock prices appear over-optimistic. In such a fragile market, any drizzling of bad news, such as slowing growth, could trigger a massive knee-jerk sell-off. The market is currently priced for fair weather in 2026, but as any Singaporean knows, those dark clouds can appear on the horizon very, very fast. My game plan for 2026 is one of caution, not a complete overhaul. Since leaving my regular job, I've strategically designed my portfolio to prioritize survival and stability rather than solely optimizing for maximum returns. This means building resilience into the core of my investments. My current asset allocation reflects this cautious approach. Roughly 50% is in equities, balanced by significant holdings in cash and Singapore savings bonds, which provide about 3 years of liquidity. My CPF accounts are also growing steadily in the background, adding another layer of stability. If markets remain exuberant, I will continue to trim my portfolio. The rule is simple. If my total return hits 10% at any point or 6% by year end, I consider selling. The amount to sell will be the gap between my projected spending for 2027 to 2029 and my current cash holdings. In this expensive market, I'll be buying less. Instead, I'm patiently waiting for genuine opportunities to emerge. A significant market correction or a perfect storm of undervalued assets would be the ideal time to deploy capital more aggressively. Before proceeding, let's do a poll. Like the video if you're also opening your umbrella and bracing for a 2026 storm, or if you think it's clear skies ahead, comment blue skies below. It's not all gloom and doom. Just as changing the arrangement of a familiar rhythm creates an entirely new piece of music, old market patterns can shift when new information appears. This means 2026 might actually be brighter than some expect, defying conventional wisdom. There's no denying that we are living in a faster world where information flows at unthinkable speed. This accelerated pace changes market dynamics. Drops could be sharper and recoveries faster. Who knows? My portfolio might still end up in the green for 2026 despite the heightened volatility. Uncertainty doesn't always equate to the worst outcome. Sometimes, uncertainty can lead to brighter surprises. We might see conflicts resolved, or a prolonged AI upcycle could drive unexpected growth. These positive catalysts could shift the market narrative and deliver better than expected results. Thank you for joining me today. In my next video, I'll be revealing the 6 stocks believed could turn out to be my portfolio's winners in 2026. Subscribe and hit the bell icon if you don't want to miss the video. Happy New Year!